What's up YouTube? This is David. In today's video, I'm gonna share with you something exciting that I've found, and I feel that it's the holy grail of stock market. Let's dive in. As you can see in this image that I've shown here, this is what I think would be a classical template for any stock traders to memorize and use. If the setup or the tickers that you wanted to trade doesn't show this form, ignore it. Why? Because patterns are what we can recognize, and patterns are the edge that we have for retail traders. Okay, before I explain to you how this works, you have to have a basic understanding of chart patterns. Patterns like double bottom, breakout, pullback, support and resistance. How I derive this framework. This is a classical chart pattern of the stock market. We first has a takeoff where the market breaks resistance level, and after that the market reverse or pullback, and it traps the bear, thinking that the market has reverse. In actual fact, the market bull traders accumulated and pushed through. So when we talk about this framework that I've come up with, I'm gonna walk you through how to understand it. First, we have a downtrend. This is a daily chart, by the way. We have a downtrend, and the market doesn't go any lower than the previous week. The market forms a double bottom. Then after that, a breakout occurs and it breaks the first resistance level. This resistance level, this is how I look at resistance level, where two bear candles forms after a bull candle. You can have a high wick, but I'm looking at the close only. So let's continue. If the market breaks above resistance level, are you looking to buy? Yes. Are you looking for weakness? Yes also. It depends on what time frame you're looking at. For me, it's a 1 hour chart. So, and for me, in order to fully make use of this framework, I have to follow and assume that the market will pull back. And if the pullback is weak, the volume will show. In this framework, the volume doesn't show because I cover it. Okay. Then after that, a weak pullback represented by another day of bull strength and a continuous bull strength and a continuous bull strength after it breaks the above resistance line and it does a weak pullback. Then after that, the last breakout. So I can see that once the market breaks out above the resistance level, there should be a pullback, regardless of whether it's a double bottom or what. And if the market breaks above the second resistance line with another further pullback, this is what I call accumulation, or the Wyckoff market cycle. Okay, then after that, the market reverse and it hits the previous day low, and surprisingly it does a pullback and it continues again. Where this market will go, where this trend will go, I do not know, but I'm only concerned with this first few breakouts and pullback. But now that I understand this, I will make use of it. Okay, let's go through one ticker to let you have a feel of how this framework works. Let's look at my scanner. Okay, SYPR. I've filtered this tickers according to first green day. First green day, as you know, is a bullish engulfing candle with a high volume. Let's look at SYPR. Let's look at SYPR. So this is the first green day with a high volume. So which phase of this setup are we looking at? I ignore the one on the left. I'm only concerned with what I see. So right now, as you can see, we're looking at the first breakout. So the market broke above the resistance line. There's a couple of resistance line, but I'm only looking at the major one. Actually, this is also considered a major one. I mean, not major, but it's good to know. Okay, scrap it. Okay, as you can see, the market breaks above two resistance line. Would pullback occurs, or the momentum will carry it forward? My first instinct were to expect a pullback. So the market breaks out above the resistance line, and the pullback should occur on the first resistance level, which is here. Okay, so I'm looking to buy. If I'm bullish, I'm looking to buy here. This is a 1 hour chart, by the way. I'm looking to buy here if it stalls. Most likely on a Tuesday. You understand? Do you understand how this framework works? Okay, let's look at another one. Let's look at another one. Another ticker. OGEN. Not so. Let me run through. Okay, I found another one. I found another excellent example. Gate. Okay, as you can see, the market breaks above this resistance line. Let's draw one. Is there volume? Yes, there is volume. So the bull strengths are in. Then after that, is there double bottom? There's a couple of bottoms. So when the market tests above this resistance line, let's draw another one. With volume, clearly there is strength, and the pullback occurs, as shown in this framework. The pullback occurs. So which phase are we in right now? I believe we are at the accumulation phase. The markets have clearly break out of this channel. Breaks out of this channel, and clearly the bull strengths are very strong. So as a buyer, where should you go in? You can look at the lower time frame and get in here. Okay, so the pullback should occur here. How do I know? Let's look back at the framework. So as you can see, the market breaks above the first resistance line, then after that the second resistance line, then after that a mini pullback occurs. So based on this framework, I would have assumed that the market would pull back here, or it will go all the way down here. But if it does, if the pullbacks occurs more than two candlestick, I would not expect a continuation of the trend. Most likely a reverse will occur. However, as this is a 1 day candlestick, if a mini pullback occurs at before the low of this candlestick, I would jump in as a buyer. As I mentioned, if the pullback occurs with more than 2 day bear candle, and if it exceed the previous day low, I would not expect a bull strength anymore. Okay, so now that you understand how to use this framework, I've shared these resources in my description below. Please feel free to use it. And this custom scanner that I've used, I've used extensively. Please feel free to use it. It's always updated on the night, on the 1 hour before the market opens, because I'm in Singapore time. So if you're watching this in the US, it'll be daytime, morning for you, but it will be nighttime for me. Okay, so I hope you understand how to use this framework. If you got any questions, please leave in the comments below. And if you find this video useful and helps you understand, please like and share. And if you have not yet subscribed, please do so. Thank you very much, and I'll catch you soon.